If you're a leader at a nonprofit, there's this one question that can cause so many headaches. What financial statements do we actually need for our charitable solicitation registration across all these different states? Getting it wrong can be really costly. So in this explainer, we're going to break it all down. And just so you know, this educational resource is provided by the team at Ironwood Registrations. They specialize in multi-state charitable compliance. All right, let's dive right into the heart of it. When we talk about registration, there's one question that seems to cause the most confusion for nonprofit leaders. It seems pretty simple, doesn't it? What financials do you need? But the answer, well, that's where the confusion starts, and it often leads to some pretty big, incorrect assumptions. You see, a lot of organizations tend to fall into one of two traps. Some folks think, oh, a simple internal income statement will be fine. Others swing to the complete opposite extreme, worrying that a full, expensive audit is required in every single state. And honestly, both of those are common misconceptions. The truth is, the requirements are a lot more specific than that. They change from state to state, and this is critical, they are very often tied directly to your organization's annual revenue. Understanding this is absolutely key to avoiding delays and some nasty surprises down the road. Okay, so let's start with the cornerstone document, the one piece of financial reporting that's really central to this entire process. Before we get to the form itself, it's helpful to remember the whole point of this registration process. It's all about one thing: transparency. Regulators, and by extension your donors, they want to see how your organization operates financially. And this breaks it down perfectly. They want a clear picture of your revenue and expenses. What you spend on fundraising versus what you spend on your actual programs, and your general administrative overhead. And the primary tool they use to get that picture? It's your IRS Form 990. For the vast majority of states, submitting your most recently filed Form 990 is the absolute baseline requirement. It's really the starting point for all your financial disclosure. But what happens when your organization grows? As your revenue goes up, so do the financial reporting expectations. And this right here is where things can get a lot more complex. You can almost think of it like a compliance ladder. At the lower revenue levels, sure, the Form 990 might be all you need. But as you grow, a state might require a CPA to review your financials. And as you grow even more, you might hit a threshold that triggers the need for a full-blown audit. Now, here's the crucial point. And it's so important to understand this. There is no single national standard. Every single state sets its own revenue thresholds for when you have to climb that ladder. So for example, you could be operating in one state where the audit requirement kicks in as soon as you hit $500,000 in annual revenue. But then, maybe in a neighboring state, that threshold is double. It's set at $1 million. This huge variance is exactly why multi-state compliance demands such careful attention. So when states talk about a review versus an audit, what's the actual difference? Well, a CPA review gives what's called limited assurance. The CPA does some analysis, but they don't verify every little thing. An audit, on the other hand, provides a much higher level of assurance because it involves detailed testing and verification. It's just a much deeper, more rigorous process. Okay, so understanding the rules is one thing, but avoiding the simple mistakes, that's a whole other ballgame. Let's look at some of the common pitfalls that can cause some serious delays in your registration process. Honestly, these are the kinds of errors that state regulators see day in and day out. Numbers in your financial statements that just don't match your Form 990, forgetting a CPA signature or a required schedule, submitting financials for the wrong fiscal year, or sending in a draft copy when they need the final board-approved version. And the consequence of all this? Your filing gets flagged. The state sends you a deficiency letter asking for corrections, and your registration or renewal gets put on hold. This can seriously slow down your fundraising and create a ton of unnecessary work for your team. So the goal here is to shift from being reactive to being proactive. It's about building a compliance strategy that actually anticipates your growth and sees this whole process not as a burden, but as a core part of your financial health. This is the first question your leadership team should be asking regularly. Are you actively tracking your revenue against the specific audit thresholds in every single state where you solicit donations? The next big question is all about consistency. Before you hit submit on anything, do all your documents tell one unified financial story? Do the numbers in your audit line up perfectly with the numbers on your Form 990? And finally, a really practical operational question. A lot of these renewals are due right after your fiscal year ends, which is the exact same time your team is probably scrambling to finalize the audit and the 990. Are you planning ahead to make sure your audit is actually done in time for those deadlines? And this all brings us to the big strategic takeaway. Compliance isn't just some regulatory hurdle you have to jump over. When you actually integrate it into your financial infrastructure, it becomes this powerful support system for stable, sustainable fundraising growth. So let's just recap the essentials. First, financial requirements are not one size fits all. They vary by state and they're tied to your revenue. Second, that Form 990 is your foundational document. Third, as you grow, be ready for those requirements to escalate, maybe to a CPA review or even a full audit. And finally, proactive coordination between your finance and compliance folks is absolutely essential for success. For more compliance guides and educational resources to help you navigate the world of multi-state fundraising, make sure you visit ironwoodregistrations.com.